You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Tuesday, April 16th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story of the day is from investing.com. It's the top 5 things to know in the market on Tuesday. The first thing to know is earnings are set to drive the session. The first quarter earnings season will drive stocks on Tuesday with another report from the financial sector, figures from 3 Dow components, and numbers from video streamer Netflix. Bank of America released earnings before the open in the wake of disappointing updates on Monday from both Goldman Sachs and Citigroup. United Healthcare and Johnson & Johnson will accompany B of A ahead of the open, while IBM will give the latest details of its cloud business after the close. Netflix is also due after the close. Investors will pay close attention to the to the effects of intensifying competition. Disney's recent announcement that it expects to start a streaming service in November has put downward pressure on Netflix shares. The second thing to know today is AT&T sells back Hulu stake, giving Disney an edge. Hulu has repurchased the 9.5% stake that AT&T had in the company for $1.43 billion, valuing the streaming company at around $15 billion. The repurchase cements Disney's control of the streaming service. Disney holds a 60% stake in Hulu through a joint venture. AT&T, the ultimate owner of HBO, said it plans to use the proceeds from the transaction to pay down debt. The third thing to know today is housing and industrial production data are due out. Even with earnings in the spotlight, there are still economic indicators to keep in mind. At 10 a.m. Eastern, the National Association of Home Builders issues its April Housing Market Index for investors keeping a close eye on the real estate market. March industrial production numbers will also provide input on the strength of the economy at 9:15 a.m. Eastern Time. Elsewhere, Robert Kaplan, president of the Dallas Federal Reserve Bank, will make an appearance at 2 p.m. Eastern. Chicago Fed Chief Charles Evans indicated on Monday he was comfortable with keeping interest rates on hold until the fall of 2020. The U.S. dollar index gained 0.1% at 96.66 by 5:53 a.m. Eastern, while the yield on the 10-year Treasury inched up 0.3 basis points to 2.56%. The fourth thing to know today is oil prices struggle ahead of U.S. inventory data. Oil was little changed on Tuesday, taking a breather from a recent rally amid concerns about the future of the output restraint deal between OPEC and Russia. The American Petroleum Institute snapshot of weekly U.S. oil stockpiles is due at 4:30 p.m. Eastern, a day ahead of the official government tally. The API data has shown three straight weeks of builds, and last week's reading from the Energy Information Administration saw a surge of more than 7 million barrels. And the fifth thing to note today is Lufthansa reports a surprise loss, and U.S. airlines are on watch. Lufthansa, Germany's biggest airline, reported an adjusted loss of 336 million euros in the first quarter, sending shares sharply lower and dragging its European peers lower with it. The airline blamed the loss on rising fuel costs and lower fares due to overcapacity. U.S. airlines such as Delta Airlines, United Continental, and American Airlines have so far avoided taking fuel-related hits to earnings, but may not be able to do so for much longer, given the steady rise in fuel prices. Delta's own first quarter report wowed investors last week as the airline produced record revenue and a large jump in profits. Our second story today is from CMEgroup.com. Looks like a press release to me. CME Group launches ENSO, E-N-S-O data insights to aid best execution financing for hedge funds. CME Group, the world's leading and most diverse derivatives marketplace today, announced that it has launched ENSO, E-N-S-O data insights, a community benchmarking tool which leverages ENSO's alternative data set to help customers make more informed investment decisions. ENSO Data Insights provides hedge funds, asset managers, and banks with access to a diverse pool of global multi-asset class securities to help them compare best execution financing rates, trend analysis for long and short positions, sector changes, sector breakdown, top position movers, crowdedness scoring, and the most active stock borrow rate changes as it relates to the ENSO rate. The tool helps clients evaluate how market dynamics are driving costs and demands to borrow stock, optimize counterparty management, and seize alpha-generating opportunities. Our third story today is from CNBC.com. The most heavily shorted ETFs in the market are soaring. On these bets, short sellers could come up, well, short. The most heavily shorted exchange-traded funds in the stock market seem to be likely targets for Wall Street skeptics, or those who try to make money by betting that stocks will go lower. They include the SPDR the SPDR S&P Retail ETF, a collection of 94 key retail stocks that is currently sold 525% short, wowsies, and the Van Eck Vectors Semiconductor ETF, a 25 stock fund tracking the world's top chip makers that is sold 140% short, and the SPDR S&P Oil and Gas Exploration and Production ETF, which holds 64 drilling and refining stocks and is sold 117% short. Yet these funds are also soaring. Year to date, the retail ETF is up nearly 11%. The semiconductor ETF made a fresh 52-week high on Monday and has gained almost 30%. And the oil ETF has climbed more than 20%. How is this possible? Some, like Advisor Investments chairman Dan Weiner, attribute the contradictory action to low trading volumes in the broader stock market. Last week, the New York Stock Exchange saw its lowest volume since December. And that, ladies and gentlemen, is news you can use for today, Tuesday, April 16th, 2019. Your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.